Guys, welcome back again. Still your boy, the Legend FS Academy, and I want to say a special thanks to those who have been watching my video, those who have been commenting, and those who have been liking, and those who subscribe newly. I want to say thank you all. I appreciate you guys, and today in today's video, I will be showing you guys on how to spot a major reversal in the market. First, there are tips you need to understand when trying to spot a major reversal in the market. One is your key zone. As a trader, you have to know the type of trader you are, so that you can be able to identify your key zone. That is why time frame and key zone has to do. They are like twin brother. So key zone, in the sense that as a trader, if you're a swing trader, if you're a day trader, if you're a scalper, you have to know the major key zone which will suit you. Then I will also be telling you the key zone which I personally use. So secondly is the time frame. The time frame and the key zone is the same thing, because without you knowing the time frame you are trading, that means you cannot be able to ascertain the kind of trader you are. Let's, for example, you say that I'm a swing trader. So if you say you are a swing trader, you want to be looking at the weekly and the monthly time frame. If you're a day trader, you want to be looking at the daily 4 hours and 15 minutes to take your trade. So you have to know the exact time frame you are trading. So once you've been able to know that, okay, I'm a swing trader, I'm a day trader, then you cannot pick the perfect time frame for you. I will still be telling you the personally I use. And the third one is chart pattern. For you to spot a major reversal in the market, there must be a chart pattern. The market cannot just continue going down without market cannot reverse without giving you a chart pattern. And the chart pattern that I use is the one I call the double top and double bottom, and the head and shoulder and the inversal head and shoulder. Those are the most accurate one I've been using lately, and it has been long I've been using them sharp, and they are mostly solid when they appear. And the fourth one is what I call a fake chart pattern. Note, after this sketch, I will also be showing you in a real chart for you to understand what I mean. So the fake chart pattern, in the sense that these guys, they know that we know that what reverses the market is the chart pattern. So what they do is that they want to fake that pattern in the middle of nowhere. And once you don't really get your zone properly, once they fake that chart pattern, you will be carried away, and then you will follow that premature chart pattern to the upside or to the downside. What they will do next is that they will not collapse the market back to the preferred point where they want the market to go. So you have to understand that fake chart pattern. Understanding that fake chart pattern has to do with your key levels and the time frame you trade. So let me quickly show you the example of what I just said. First, let's start with key level. Let's say we have our key zone here. Let's say we have our key zone here. We have our first key zone. Let's say this is our weekly key zone. Let me clone this, and we have our. Let me make it shorter. And let's say we have our daily key zone. This is daily and this is weekly. So now you know that when the market is coming, the market is always going in this formation. So this is the normal formation of the market. Sometimes it may look more dirtier than this. This is just a textbook example. So this is just the formation of the market. So now, when they come to this particular zone here, what they do is that they will now give you what we call a W pattern. This is a sign of reversal. Sometimes they will even close it, give you a break and retest for you to think that this trend has changed, that this trend has flipped bullish. So what they do is that they will not trap a lot of buyers. A lot of people will not buy. But what they will do is that once the market gets here, the market will not give you what we call equal high. It will not even be enough to surpass this particular zone one here. The market will now collapse back here. So once the market collapses, this is the exact place where the market can now do what we call a proper reversal. Let me quickly give you a guide. Let me quickly give you a hint on why you should always watch out for weekly chart pattern. So first is that, this particular formation here, this is done with liquidity. For you to form this pattern, I've done a video on that. You can do well to watch it. For you to be able to convince people or convince a lot of traders that this market wants to go up, why in the recent you want to sell, but you just want to convince a lot of traders to buy so that you can take their stop losses. It has to do with a lot of funds. They have to use liquidity to induce they have to inject a lot of liquidity to form this pattern in order for a lot of traders to get trapped in buying. Why they in the recent they want to sell. So they have to use a lot of liquidity to do this. Whichever time frame you are trading, be it on as a swing trader, I majorly focus on the weekly and the monthly, but I feel I mostly check on the weekly for my time frame. If you're a day trader, you can check out for 4 hours and daily, but your daily should be the most important time frame you will be focusing on despite whatever. Even though you are looking to catch 20-30 pips in the market, always reference the daily. Like me, I always reference the weekly. So now, with that being said, you've known the time frame you are looking at for now. So what I do is that they put in a lot of liquidity here to form this pattern, to trap a lot of traders in the reasons why they will not come and flip it here. So why it's not that they cannot do it on a weekly time frame. They can also do it, but it will cost them a lot of money. Let's say to give you this particular formation here, now this double bottom here, and flip it, let's say it will cost them, let's say for example, $2 million. $2 million for them to give you this kind of formation. But on a weekly, a weekly has a massive candle. You can imagine when it takes 1 week for a whole candle to form. So it will take them, let's say, $20 million for them to give you this kind of formation here. For them to even want to trap you and go down again, it will cost them a lot of money for them to give you this pattern. That is why you see on a weekly time frame, you hardly see a market manipulation. When chart pattern forms on a weekly, is solidified. You will hardly see something like this happen often on 4 hours. Let me show you something. Something like this happen real on 4 hours. So what they do is that this is a reversal pattern on the 4 hours, but this leg here was what we call a stop loss leg. This is a stop loss leg. So they use this leg to come and take out a lot of stop losses which is resting below support or a resistance zone before they will now flip the market upside. This particular formation, you will always see it on 4 hours, on 15 minutes, on 30 minutes, whichever, on lower time frame. But on higher time frame, you hardly see those kind of formation there. Why? Because it will take them a lot of money to build up that particular chart pattern. So they will likely don't want to do that on a weekly time frame. But on a daily, they can, but not often. But in the most time, they can also fake it on daily, but not often. But on a weekly, you hardly see such manipulation on a weekly. That is why you have to look out for this particular chart pattern on a weekly if you're a swing trader. And if you're a day trader, you should also look out for this particular chart pattern on the weekly time frame. Once you spot this on the weekly time frame, best believe that you want to buy. Don't allow anybody to tell you otherwise. You want to buy, and make sure it's aligned with your key zone. Once your key zone is properly mapped out and you see this formation on the weekly time frame, don't allow anybody to tell you otherwise again, because for the chances of this manipulation happening on the weekly time frame is very hard. So with that being said, let me quickly walk you over to the chart I have it on GBP USD. The example I want to show you guys, I also have it on the USD chef. That is where we can now spot that fake pattern I told you, fake chart pattern. And I also have it on the GBP JPY. Those are places I will get the chart pattern for you guys. Let me quickly go over to weekly. So now, as I said, I'm a swing trader and I focus majorly on weekly. So whatever one that works for you, you can see it. So now on the weekly time frame, last week I did mention this particular thing on my weekly analysis when I was calling this chart pattern. Note, I said the most chart pattern I use is head and shoulder, but I will just be focusing on the double top and M pattern for now. So look at this particular pattern here. When you watch, this is the M pattern which has occurred previously, and the moment this pattern occurred, what happened? The market collapsed. Look at it again. The same pattern is forming again. The same thing, the same thing that happened here is still the same thing that happened here. So the moment I saw this particular pattern, that was when I reanalyzed and I did a video that, hey guys, there's something coming up, which is what has happened previously, which is the M pattern, and is about happening again. So let's watch out for this particular neck for it to be taken out, so that we can go short. So the moment I saw this, let me quickly go over to daily so that you can be able to see it well. Let's go over to daily. This is it on daily. You can see that everything was aligned. Even on daily, it gave us this particular M pattern again, and from then the market collapsed. The market collapsed. The same thing here again. Same thing is happening here again, and the market also is giving us the same formation. First top, second top, and the market has collapsed. Currently now the market is making a lower low, lower high, lower low, lower high. He has tested this particular supply zone, which I map out here, and the market is still collapsing. So let's quickly go back to weekly again for you guys to see. So this is it on the GBP USD. Let me quickly now show you on how to spot the fake pattern that happened on USD. And when this fake pattern is about to happen, I called it that this is a fake pattern. I will not take this pattern because we're still having a key zone that the market has not reacted from. So look at it as I circled it. You can see that the market was the same thing I explained, that the market was just coming, and the market was giving us this kind of formation. The market was giving us this kind of formation, and the market formed this particular W pattern out of nowhere. The first one should be out of nowhere, not until the market, because when this particular pattern formed, the market is just currently somewhere here. So I classify this particular zone as out of nowhere. If this pattern form out of nowhere, not on a key zone, I will see it as a fake chart pattern that wants to trap traders, because one, all this one was not there when this pattern formed. So I said that this pattern is I said it to the Discord platform where I belong, that this guy is still going to bleed. And finally, what happened is that the market went up, even completed the pattern, and what happened is that the market collapsed again. So it was when the market now got here that we can now say this is a support zone, because you know that a support has to be tested 1, 2, sometimes 3 times for that support zone to be valid. But on seeing a particular single zone that the market reversed from, is not solidified yet. It has to touch first touch, second touch, probably third touch before you can now say this support zone is valid. So now I cannot use this particular zone. Since they have given us this particular one, it rallied up, it collapsed all the way back down here, and the market started reacting from that particular zone again. I can now say, okay, this is a minor support zone which has held market first time, second time, third time. So those are the tips you have to look out for. If you check on, or when I did my analysis on weekly, there are also minor this thing, but I wouldn't want to go into that now. I did that on my laptop. I wouldn't want to go into that now. But what I just want you to observe is how the market is reacting, and how the market can easily manipulate people who don't really get their zone properly. So let me quickly go over to GBP/JPY for me to show you guys how solidified this pattern is whenever it forms. So let me go over to weekly. So on GBP/JPY, you can see the same pattern. Whenever this pattern occur, you don't easily see a manipulation. Look at the market, the pattern will just occur. Look at the way it's aligned. It will just give you this particular formation here, first leg, second leg, and the market will rally. If you know what you're doing, the moment you spot this on a weekly and the market close above this particular zone, wait for a pullback, then you can join. Then come again. Let me quickly show you again. You can see it again, same pattern, same formation all the time. Look at it again on the weekly. The moment the market formed on the weekly, what happened is that the market came back for a retest and the market shoot up. And from when the market is giving you this kind of formation, the market never came back below it. And same thing happened here again. Same thing happen here again, but we have a little stop loss run. Why I think that this stop loss will happen is that because the market has not given us this particular formation, this W pattern here. This was the candle week. This was the week of this candle that came below this particular trend line. And the moment it came and the market formed, not that they cannot do it on the weekly, but like I said earlier, for them to run this particular sheet on the weekly time frame, it will take them a lot of money. It will take them a lot of money for them to do it. Not that they cannot do it, but it does not really happen often on a weekly. When you come on a weekly to analyze, you have less manipulation on the weekly, so that you can now get your daily 4 hours. You cannot get that direction clear. So always look out for weekly if you're a swing trader. Then if you're a day trader, always look out for daily. So daily 4 hours and 15 minutes for day traders, and for swing traders monthly, weekly, and daily, and 4 hours for my entry. That is how I've been trading lately, and that is what I've been using over the year now to trade. So you can also do well to check it, back test it, and know if everything I'm saying here align with your own style of trading also. So that is all for now. Still remain your boy, the Legend FS Academy. That will be all now for now. Please, if you like my video, if you like the way I teach, please do subscribe to my YouTube channel and turn on the notification bell. And if you still don't like it, please give me a thumbs down, give me a dislike, but tell me in the comment box below what to do to improve my next video. As you all know, nobody knows it all. I'm here to learn. You are here to learn. You learn from me, I learn from you, until we attain the level which I call the CPT, consistent profitable trader. I'm not totally there yet, and I know a lot of newbies trader. A lot of traders are not totally there yet. Why not join us and let's go on together? I'll see you in my next video. Peace out. Bye.